everybody. See you very soon. Alrighty, welcome everybody to our Wednesday webinar series. My name's Thomas Atkinson. As always, I'm joined by Tyrone Abella, and this is for the end of Australian financial year, 30th of June 2021. Tyrone, how have you been? How are the markets treating us at the moment?
Markets are treating us good. I'm very glad that it's the end of the financial year finally. It's been a very, very big day for us, as you well know, Thomas. It's probably the biggest day of the year. Everybody wants everything done before midnight. And you know what? Go away, I say. Don't leave your last minute tax problems to us. I say, Thomas.
Yeah, I did get some random messages today. There's no doubt, Ty. People calling me. It always happens. It's like it's the day before and the day of. That's what happens. And then the day after. Did I miss it? Did I miss it?
364 days. 364 days to organise your shit. Don't put your shit on us.
Oh, my goodness.
Anyway, markets are moving and we're setting up for a pretty interesting non-farm payroll. So we've got some good stuff to look at. Looking forward to getting into the markets tonight. I think we're getting some key setups at some very, very key levels that I reckon are going to give us some really good fun next week. So definitely looking forward to getting into it. So let's go.
As always, Ty, just quick risk warning here. It's important to understand that any information contained in this webinar is purely for educational purposes, and the information, of course, presented here today live will be considered only general in nature. The information provided will not take your specific needs or circumstances into consideration, and you must look at your own personal situation and requirements before making any financial decisions. So as we like to do, we're doing a live stream here. So let's get straight into the live charts. And I think one of the places that we always start, Ty, well, actually, firstly, let's just tell everybody what we're going to do today. So we're going to go through, as we go through a whole bunch of different setups for, of course, the private community here. And we're going to cover off some currencies and Forex at the beginning. We're going to look into commodities along with that. Then we'll go into some indices. Then we'll go into some stocks. So there's plenty to cover, and we'll be just bursting through a whole bunch of different stuff here. So hopefully a lot of you have done the course. We know you have. I see Cody's joined us. Welcome, Cody. Welcome to the new members as well. It's awesome to have you as part of, I would say, one of the best trading, the best, Ty, the best trading in the best.
Oh, come on. One of the best.
I'm going to be humble.
No, we don't have to be humble. I think we are the best. And you know why we're the best? Because we've got the best community. We've got the best people in there who are sharing their ideas. And it's not about Thomas and myself. It's about the community. And that's why we're the best. Because I think we've got the best community. And we've even got Darth Sidious in here tonight. I reckon we should do a minute chart just for him.
Well, we might get down the 1 minute chart very soon. So let's firstly talk about this dollar index, Ty. Now, this is a classic, I'm going to call it the Tom 123 trade. Why not? You have the lightning bolt. It's the Thai lightning bolt. I'll call it the 1, 2, 3. So we've got the resistance, the false breach. Then we have some interesting price action. I just really want to talk the community through this super quickly here. I think it's super important, and you've got to understand the price action here. So initially, it looks scary. But remember, if you're on these time frames, like a 2 hour here, we've got it zoomed in hard, and you're seeing rejection, which is this is basically a long leg doji. We've got a high, we've got a low, we've got a very, a body that's kind of in the middle. So it's indecision around that resistance. Then we get a buy wick hammer, a buy wick hammer, 2 small candles, and a bullish closure above, plus another bullish closure above, and then of course the pullback. There is multiple ways that you can trade this. If you're waiting for the confirmation, you get the confirmation either on this candle or this candle for yourself. That's a great trade long. You also get the pullback back to the zone, another great trade long. And if you accidentally pulled the trigger here, by read, you shouldn't have your stop loss down here, shouldn't you, Ty? No way you shouldn't have it under here, at least. And then you get the ability to take that long. And these candles, reading each one. Am I scared here? No. Am I scared here?
No.
Absolutely not. Here? No. These ones are insides. Why do we care about these? And then, yeah, and then bang. And then we feel so good. And even the pullback, we never feel bad. Once we read the charts, we never, ever feel bad in this trade.
100%. What I always try to encourage people to do is, sometimes forget about that symbol that's actually telling you, what you are actually trading, and just look at price first.
True.
And I think it tells you everything you need to know. And I always say that a lot, but it's only because it's true. Buyers and sellers in every candle are telling you exactly what is happening. And, probably 8 times out of 10, your buyer and seller momentum is going to work out for you, regardless of what that symbol is. So don't get too caught up in that, because that's when biases start to kick in. Sometimes you just got to trade what you see.
Yeah, it is just all about trading what you see. And I just want to go through the step by step by step. You don't have to be scared in a market when you understand what those price actions are telling you. And Ty couldn't have put it better. Now, Ty, you're all over the euro at the moment. So let's get into the euro US dollar. Is that the one? Because obviously we have dollar index strength there. So that's coming into non-farms. Yeah, here we go. The
direct opposite of the dollar index, of course. And look, this has been the game. This has been playing the game really nicely. Anyone who's in the Tuesday market watch trade should still be in, obviously. It's sort of trying to approach the halfway mark of the trade that we're in. We should be up about 14, 15 pips or something. But it's looking good. I mean, that's the target. I mean, you don't have to be an Einstein to work out that's where the target is. It's preset there. It's already gone down there. You can see the weakness above. Like, look at that weakness. Like, you've got 4 or 5 days of real weakness. Yeah, exactly. The dollar index is trying to push up. The easy trade is down to the 1850. Now, it doesn't mean it's absolutely going to get there. Well, of course not. But what we've done is we've put market momentum and the odds in our favor by taking this trade at a safe level. Now, our stop loss, have we lost sleep over this trade because it's gone up to the 119 again? No, of course not. Because, well, for starters, you shouldn't be losing sleep about any trade, because you have to have your risk management in place. And if you're only risking the correct 1%, which is what we always advocate, no trade should ever keep you awake at night, okay? But this is a comfortable trade. I really like this trade, and I reckon it's a chance of getting there before non-farm payroll. I don't reckon it's going to have to wait all that time. It's only got to go another 30 pips, and I think it could do that in the blink of an eye. But the 2-hour chart and the 1-hour charts show you how many opportunities you actually get into the pullback of the 20, the one we always talk about. Like, this has been weak for effectively 5 days now, and look at all those opportunities to take. Even if you're just scalping really short attempts at 15, 20 pips at a time, you've been given about 7 entries there just on the 1 hour. So whatever time frame you go to, 2 hour, 1 hour, they're all there. So, and this is what I like about it. Yeah, when you jump in, when you see something happening on the bigger time frame, Thomas always says, take the big top-down approach. Look at the bigger time frames first. Even if you're trading a 1 hour or 2 hour chart, the daily is giving us our bias here. Like, we know on the daily, there's no way on God's earth we're taking long positions on this thing until we see a very big reversal. So we're only looking for shorts. You can go to whatever time frame is suiting your trading style, whether it's you're an Asian trader, or whether you're a London trader, or even a New York trader. You're going to take those shorts. It might be on a 1 hour, 15 minute. And when I say Asian trade, I'm not talking about Asian as in Asian people. I'm talking about the Asian session, right? So just so we're clear. But the euro doesn't move much in the Asian session, like even in the Australian session, but it still gave us opportunities to actually get in. And I think that's the important part. The action happens in London and also in New York, but you actually got a chance to get in the Asian session on those little mini pullbacks. And I think that's why you need to look at the bigger time frame first.
Let's just quickly go through these 2 supports here, Ty. Just if we get through this zone, it's something like this, like a little closure below, pullback. Is that another opportunity as well as the 20 comes down? Like, imagine if we go below, come back, hit the 20 because the 20's caught up with it. It hits at the same time. What do you think about that as a potential later on? It could happen before non-farms for sure.
100%. Yeah, it definitely could. And it's the next trade. And the good thing about that, but it's a totally different trade. So I mean,
Yeah.
we take the take profit at the 1850 that we want. If the market is kind to us and it does that, then obviously the next target is the breakdown and off we go again. But I think though, I want to wait and see. After non-farm payroll, strange things can happen. Like the market might reverse all of a sudden. The dollar index starts to weaken, and this is up above 120 again. So I think you just wait and see. Take the first trade, and it's a good one. I like it. I think the dollar index backs it up quite nicely.
Yeah, I tend to agree that it's all kind of synergizing together. Now, the pound is doing its own thing. So a few weeks ago, we talked about the euro pound, and oh, God, it's just so slow, Ty. It's so slow. This is a slow one, but it is still to the short bias. Like, we might as well revisit it because we obviously talked about this to the short. We talked about the closure here. We got that initial flow on. We got a pullback that was still fine with the stop loss because obviously our aim is here. Then it shorted again. Then it moved back up again. Then it gave another entry in. Then it closed below. And of course, it did a very similarly nasty kind of move. But the candles that we've seen here, if I look at the pound and I look at the euro, they're telling us almost different stories. This is a rejection week, and then of course a big engulf that's coming through here. And I just had a look at that pound on the 2 hour there, Ty. And to me, this is kind of like, really getting close now to saying, hey, maybe we want to start looking at some long potential. I mean, you've got effectively a base, and then you love these kind of reversals, don't you? I mean, when you see a reversal like that, a big bullish hammer coming off the previous low, and then, of course, you've got this double bottom potential that goes into this trend line. You love that type of trade. I know you do.
Eve Adam double bottom.
Yeah.
For all of you that
I wasn't going to say the Eve Adam part, but yeah.
it's the Eve Adam double bottom. I'll explain that in a Q&A Thursday for those of you who don't know that.
Someone remind me. That one.
It does. And I've got to be politically correct again. But it's a thing. I didn't make it up.
Yeah.
So, I agree. Look, I totally agree. I think one of them needs to do something. To me, the euro still looks weaker.
Yeah.
I still think the euro's got more downside than the pound USD. And I think this is probably the cross pair to watch if we start to see some really big trends kick in. I think this is your go-to pair, I think. You'll come to this one straight away if the euro really starts to tank. So I think it's going to tank harder than the pound. That's from the market perspective.
So you're thinking, so here we've got the pound US dollar. So the pound US dollar strengthens into this, theoretically. That's going to force that euro pound further down. Hopefully, eventually it actually hits that damn take profit that we've been sitting there for. And then we've got a series of lower peaks here as well, Ty. Now, obviously, we expect weakness at that point. We also expect weakness because it's going to be around this level of support. This is the type of things you want to put together. But just like we've been seeing in the stock market recently during the YouTube lives, during the chart of the day in the Discord room, hopefully you guys realize there is chart of the day. I'll show you where it is if you haven't been using it and you're a member. And, we breached this. All of a sudden, we're talking about a totally different game. We could theoretically have the euro going short at the same time the pound is showing a lot of strength. This is a 3-touch lower series of peaks. Now we get another touch here, consolidation, slight breach. Tyron and I have talked about these trades all the time on the daily. We saw them on the US dollar yen probably a few months ago now, that led into monster trades. Do I even have one? Where's my US dollar yen? All right, we got to get there. We just got to do it. I just got to show everybody because it's the same thing, guys. We apply the same strategy. Here it is. Here's the series of, I forget how long ago it was now. There's the series of all the lower peaks that came through. Now, this is obviously a big deal because it's a daily time frame. But look what happens when it breaches. Look at the trend that it started. And it's done it time and time again recently in this beautiful ascending here as well. It's just continuously doing the same thing. They call it the repair area. And I just always want people to know that. Speaking of which, let's go over to gold, Ty. Because gold is also showing, or has been showing, the similar types of weakness to that euro trade. Look at the daily here. We have a lot of rejection candles. Now, if this had closed above the 1800, let's just talk through the community here. How crazy would this have gone long, in your opinion?
Oh yeah, it would have probably reversed that whole move down. But
it would have gone nuts.
It would have gone nuts. But look, at the end of the day, I mean, I think we were talking about this last week where it was forming a pennant. I mean, it was forming a flaggish sort of pennant. And I mean, it's broken through that now, and it's done pretty much exactly what you would expect for a pennant to do. I mean, it's got a fair bit of falling to do to actually reach its full potential. But at the same time, this is one of those ones where you wouldn't want to be second guessing the long. I mean, I fancy taking a long position after all of those, you know, 5 or 6
you would
really
never do
whippy
it.
candles.
Only
Like,
if
you'd
you
have to
breach
be.
it and close. No
Yeah,
way.
you'd want to be. Yeah, like you'd want to be taking gee, that's a serious punt. I mean, it's not even a punt. That's not even no.
Well, I think we did the correct thing, and we kind of trapped it between the. Now, if you'd shorted earlier, I could totally. Tyron and I both see your case. Like if you short around this 17,
On a smaller
72,
time frame, if you go to a 15-minute or a 1
let's go
hour
15
and you
minute.
start doing, you'll see opportunities to short that. There's no worries about that.
See
like
this?
you're going to see, yeah, absolutely. You can see them everywhere. Like they're definitely going to get chances to short that. I mean, far out. You're always going to get those opportunities on the smaller time. And I'm never going to look. You know what? Even if you take the wrong trade, right? Don't ever be afraid that you've missed something. Like I think people sometimes are afraid that, oh my God, I've made a mistake, I'm so embarrassed. Like don't ever be embarrassed. Like sometimes you do miss the blatantly obvious. And the easiest way to miss the blatantly obvious is to actually be fixated on a smaller time frame and not look at the bigger time frame. Because you know, you could easily get sucked into going long on gold if you didn't look at that daily and see about 7 candles of weakness, basically telling you that this is not going long unless something fundamentally changes. So, you know, on a smaller time frame, if you're getting a swing high on a 15-minute and you want to have a scalp, you know, technically you probably wouldn't do that because you're trading against a very strong trend. But yeah, no one's going to take you to jail for it. Like you just have to be. Sometimes you're going to miss them. Sometimes you are going to miss the obvious, and I think that's probably why I always advocate in the room for people before they even place a trade, run it by the room. Put it in and say, I'm thinking of going long on gold. I'm thinking of going short on the euro, and see what people say, because sometimes, you know, you might get something, a hint of something that you didn't see yourself by someone who's looking at something totally different. It's like putting the boot on the other foot, and seeing, yeah, obviously more eyes the better on every trade, but you might get a hint on something that you might have missed. And you might be surprised actually how many times, even like, that's the thing. I mean, yeah, Thomas and I do too. I don't think for a second that we always miss stuff because we could be in a bit of a hurry, or we're a little bit, you know, biased on a position and say, well, that's going short, and we don't even look at the bigger time frame because we're in a bit of a hurry. Everybody does that, right? No one is absolutely perfect. But I always say, you know, if you're a little bit unsure, especially, run it by the room. There's always people in there, always people willing to help. Never be embarrassed. Goodness.
No, and it's all about putting together the theory from the top down. Ty mentioned it before. We have weakness here in terms of daily candles. We go in search of our day trade, of our scalp. Now, we don't obviously do this a huge amount. You know, in I guess the YouTube, it would die. It just wouldn't work out if we did this all the time in YouTube. It's not the type. But right here, right now, for the private community, this is the type of thing that Tyron and I would break down. We'd break down that daily. We'd say, damn, those candles look hideous. It's in a downward trend. So we're instantly looking only for shorts. The only way we would be taking a buy long would be a breach of the 1800, purely because we've talked about this before. If you have a whole bunch of rejection wicks, and then all of a sudden you see a closure above those rejection wicks, what's that telling you about the market? Something has massively changed. Wall Street, whoever the hell it is, has come in and they're going to buy that up. At this stage, we had rejection wicks with no breach above. So we have this amazing 1 hour support coming through here. We have a peak, a lower peak, a lower high, or lower peak, whatever you want to call it, lower high again. And then we breach that zone and get pullbacks. That is an absolute beautiful short. Now, where should you have your stop loss? No question, you should have it above that percentage there, at least. And that is exactly the area. You get the confirmation, you get the conservative pullback, and you've just, with a scalp like this, you've kind of just got to pull the trigger. You've kind of just got to pull the trigger and just go play the statistical game. But that's a great trade.
Absolutely. And have faith too that you've got, you know, if you've got, you know, all those moving averages, a support zone in between your entry point and where your stop loss is going to be, you're getting a lot of, you're really getting a lot of, you know, protection. That's what it's all about, protection. You need to put as much of an obstacle between your entry point and your stop loss as you possibly can. So they're going to protect you. And obviously the opposite is true if you take profit.
Now, I want to talk about where we're at the moment, Ty, and I know we're laboring on gold, but there's just some really good education learning here, and this is going to help everybody make decisions throughout the next couple of weeks and everything else they're going to be doing in their lives, hopefully. So we've got here a support that got hit by gold. Like, obviously, we know that's a wick support. Then we close a daily, and it's kind of like, it's really questionable where that daily closed. Now, we know the daily is the most important time frame. We look at an 8-hour, and we go, okay, there was a big sell-off. Now, the problem is the giant candle like this is, like, you could say, okay, I'm going to take a position in here. I'm going to take maybe a third of my position or a half of my position. That might be your psychology behind it. But as we're seeing this play out more and more and more, we're not quite seeing the sequence that we want towards the short side, are we, Ty? Like, we just need that. Like, I would like probably just this low to get taken out. And you know what? I would be very comfortable that this is going to continue on down. But at this stage, you know, it gets back above these highs. That could be a true false breakout. I'm looking at it very eagle-eyed. If I'm positioned half in, I've got my stops set, and I'm very prepared to potentially reverse the position.
Yeah, 100%. It's a good one, but it's not absolutely perfect at the moment. I think it's got a little bit of work to do on both sides. My preference is probably, to the short, because I think but it needs to get past that low. I mean, it needs to get past that 1750. And if it does that, a daily close below 1750, probably 1700s, probably the 1720 to 1700. I reckon that 17 or even the 1680 level is a really, really strong level. Look, there's obstacles every $30 or $40 after that, but I think the targets are pretty clear. And realistically, 1680, I know people think, oh, that's ridiculous, Ty. What are you saying? It's like $80 away. Yeah, it can get there very, very quickly. Once it gets a bit of a wriggle on. Don't forget, that 20 moving average has just crossed past the 200 and the 50 on a daily chart. That's not to be sneezed at.
Yeah, it's definitely looking weak, but we're at that consolidation. We need that little bit extra oof because the daily didn't quite give us the full breach we needed. All right, let's get off that one, Ty. We talked about the euro pound. Let's just quickly go through these yens for a second. Is there anything here? Now, remember, it's non-farm payrolls, so we're not going to go hugely into currencies. I do see a mega support here on odd yen that could get breached and then offer opportunity. Obviously, it's shorting on down there. This is a daily time frame, so here's clearly a great support line to have on your larger time frames. And you look at this and you think, oh well, this is a mega pattern that's occurring here. And if it does breach this zone, I think 200 is definitely in order. So there could be a good trade leading up here after possibly non-farm payrolls. Let's have a look through some others, and then we'll go into the indices and let's have a look at the odd US dollar. That's a great short. That's a great short, guys. Damn. Even I don't have this short, but you know what? If I'd missed this little bit of a pull through, which would have been our go signal, and I would have then taken it off that one there a day and a half ago. That's a phenomenal trade short. Phenomenal.
I am enjoying that one, yes.
You're in that one, eh? Where's my phone call, Ty? Come on, man.
In the financial year, it gets a bit busy. We can't share trades that much, but that was a really good trade. There's a role reversal 101, right? Like we talk about that all the time. When you're there and you see that, how can you not? If you're not trading that, are you really trading? If you see that and you don't trade it, then you need to look at the role reversal modules. Absolutely. Because when you see those sort of setups, you really want to be taking those. There's not a lot of reason not to. So if you don't see, and for anyone in the room, like I said, don't be afraid to ask. But if you don't see why that wasn't a good short, PM me in the Discord and I'll explain it to you. Okay? Because it's really they're the ones you don't want to miss. They're really, really important.
Yeah, that's a good one. That's a good one, guys. And you can see that massive follow through that happened. If you missed the first one, now what Ty and I don't talk about, what we don't want you to do is just say, oh, hey, rejection candle, I'm going to short it. It doesn't always work like that. See how it put you through a ringer through that day? You want it to follow on. Where's your stop loss going to be? Obviously, a percentage behind. Now, if you don't feel comfortable with that for some reason, you can also sometimes wait for the next candle. And in this case, yes, I know there's a daily 200 there, but it's breached it before, so it's less important as it was. And that is just, a beautiful closure after such a big rejection of the role reversal. Nice stuff. Good trading at that point. And there's still more potential in this. I mean, if the US dollar continues to pull, we know where the target is. 73.60 and of course the 74.80 zones. Phenomenal stuff. All right. Is there any other currencies that you've got, Ty? I see some people in the room have got some questions coming in here. We've got CN50, so I'll just do that quickly here for Ray.
Is that Ray?
Of course it's Ray. We know it's Ray. It's always Ray on the CN50. So maybe he got a little bit sneaky in there and started purchasing this the other day when it was like really the 50-50 coin flip zones. I think actually this was the zone he was looking at. So it's basically back to where it was. Now, let's have a look at the weekly. When we're talking about indices, weeklies really play out. So this is the futures contract that's still open, so it trades all the time. You'd be better off not looking at the futures contracts, but I don't have the code for me at this point. Remember, always look at the real market volume and trade like we do on the SP500, like we do on the Nasdaq, rather than just looking at what I call the fake market futures. I think it's more important to see the real trade going on there. And what am I seeing? I mean, if I was sitting here going, oh, do I want to be in this position? And I took away this line, which doesn't probably even deserve to be there, then I would say, I don't love anything right now. Do I think there's a clear level coming up? Yeah. I mean, we breach past this zone, Ty. I think that's a real repair, trough, peak, higher trough, higher peak on the daily. That would be nice. That would be awesome if it did that.
Yeah, absolutely. Ray, did you trade this? Can you pop it in the room? Are you in long or short on this one? I know you were trading it last week, but you do jump in and out. Let us know where you're tracking on this one. I'd like to see where you're at with it.
I want to show the room, the trade or the investment trade thing that I think's better though here, Ty, and moving forward is the Shanghai Composite, or in just general the Chinese stocks that are starting to pull through. This is a weekly chart, and we need to remember this actually hasn't breached since 16. So we have 16 high over here. We have these gap breaches that were quickly followed. Remember, it's a gap breach up, no bullish closure. So I think Tyron agrees with this. We kind of negate that because there was no bullish closure above. We have consolidated with a series of higher lows, breached that zone, pulled up, tested again, pulled back down, bought up with an engulf, and we're now at this level. Now, one thing we know about the Asian markets is that when they start running, they go crazy. Now, not every time do you pick the exact zone where it goes crazy, but we've had some epic bubbles throughout time here, and you would think, oh, it's never going to happen again, and it did happen again. So this is coming up to a zone, Tie, on the weekly that I think is well worth considering playing around with once it happens. Because you know what? When it happens, it could be like a lot of little trades to the long side that open up. You can see how aggressive it was, potentially on the 15-minute, potentially on the 1 hour time frame. Because you've done that top-down analysis, there might be something here. Your thoughts?
Yeah, 100%. I think it needs to do the work, but I think it's building a case already, isn't it? Like it's starting to build that case. And you've got to keep an eye on it. I wouldn't trade it right now, but by golly, you'd be watching it. Yeah, absolutely. Yeah. It's got to do the job. And if it does the job, I think that, you're right. Like the movement will be big. And you say, look, the problem is a lot of people think that, I'm going to miss half the trade by the time it actually breaks through, and I'm going to, maybe preempt it, and no, you won't. You're not going to, because the move is going to be big, and you're going to get a big move. You're better off not preempting it, because then if you get caught up in the white water, in the whipsaw, then it's another trade you got to make back. You don't want to be. There's nothing. I don't mind taking a losing trade. I hate taking a losing trade that I shouldn't have placed. Yep. If everything lines up and you take it and it loses, well, that's trading. That's what we have stop losses for. Mm-hmm. But there's nothing worse than having a crack and losing, and then you sort of think that was just a stupid thing to do. And I don't do it as often anymore, but by golly, when we first started, we
used to take some very early entries. Let's just say that. Let's have a look at, speaking of maybe not early entries, Ty, but something that is firing up here. What do you think of this chart? Now, you probably don't, I don't know if you know what Baidu is, but you know Baidu?
No.
Okay. It doesn't matter. Anyway, it's a big Chinese stock. We don't always trade all of the same markets here, guys. But this particular stock, let's look at it just from the fact of what it's done so far here on the daily, and that's the reason I wanted to bring this one up. We've got here the low, and of course the intervening point here. We've got a series of like a trend line that's gone through where it's had lower high, lower high, lower high, and that's breached. What do you think about the recovery of this stock and what this bodes for potentially, you know, the future, based on the fact that it's gotten crunched? Like, there's no doubt that's got crunched. Is this the type of thing that we look for in charts when we're looking for buying stocks for?
And this is exactly what I was talking about earlier. I don't know Baidu from, you know, Fubu or Fidu or whatever it is, but I look at the price action, right?
Yep.
And the price action tells you that you've got a higher high and higher low sequence. You've broken above the trend line. You're getting a moving average crossover about to happen. The 20 is not far off crossing the 200 and the 50 on a daily chart. Momentum is with you. You know, and that's all you need. And when you see momentum starting to shift in your direction, then you go to the smaller timeframes to look for the opportunities to get in. And you got very clear targets above too, right? Like where that trend line started is going to be your first point of call. Yeah, that whole area around that sort of 220 to 225. So yeah, you got plenty of room to get moving. But market momentum is everything. Price action is everything. And this is why we teach it. This is why it's in module 1 of the course, because it's the most important. And indicators are, you know, module 4, because it's not because they're the least important, but you don't want to be reliant on them, because if you can just rely wholly and solely on what price is doing first, the indicators just do exactly what they're intended to do, indicate what is actually happening rather than actually cause you to make decisions. And that's really, really important. And another question we get asked all the time, and you know, and on a Wednesday webinar especially, we don't have many indicators on the charts. And Tom's live streams, obviously, he has to zip through, you know, millions of companies every night. We don't have MACD and we don't have you know, stochastic and things like that. It's not that we don't use them, it's just we haven't got time to talk about them at the time, okay? That's the only reason. Do we use them in our everyday trading? Oh my God, do we use them? MACD especially. Stacy, I know you're there. MACD especially. It's my favorite. It's the one. Moving averages and MACD, I can survive wholly and solely on that. I mean, that MACD tells you the story. It tells you all you need to know about what the indicators do. And the moving averages are moving closer and closer together until they're about to cross. And it's about to go, well, it's technically already above the zero now. So yeah, the momentum is shifted, price is shifted. There's a lot in your favor. And it doesn't matter what that symbol is. Momentum is in your favor.
Yeah, I mean, look at this, Ty. We've got momentum coming in our favor, and we know from reading countless Goldman Sachs, JP Morgan, you know, who the hell knows reports, what is one of the main indicators that they say? The MACD is crossing from below to above the zero. I still remember reading that in the UBS report all the time. They love it. They love it.
Yeah, half those clowns don't actually know what that actually means.
No, but they love that.
It's actually, they love it, but they don't actually know what it means. Now, all of you guys know better. You know exactly what that MACD crossing the zero means. It's significant because we're getting a significant cross of one moving average to another. And that's telling us all we need to know about momentum. Very, very important.
So when we're marrying it all up together, Ty, and this is, you know, we are ahead of non-farm, so we're just trying to give you guys real practical application to the types of things we teach in the courses, and we obviously talk about in the private community here. So we've got a cross from below to above. As you said, that's important because all the movings. We've got our trend line being the first sign of repair. So we have our trend line being repaired, and we have our trough, peak, high peak situation, or as some people might even look at it, when they zoom it in, they might say, oh, it's a double bottom or something. It doesn't really matter whether it's a double bottom or it's a lightning bolt or anything like that. It's a repairing situation that we understand in the markets. We've got clear targets, and we clearly can see that things are heating up in these stocks. And of course, then we want to go and say, well, is this happening across the board? And then you'll start looking at other stocks. You'll say, oh, well, this one also looks pretty good. Ty, does that look good?
Yes.
It looks even better. It looks even better. We got... Look at it. I mean, this is not insignificant what's just happened here.
Not at all. Like you can see, you got the moving average is even closer to crossing. You've got, this is probably a more pronounced double bottom. You've got MACD rising quicker. You've even got a volume spike. I mean, goodness.
Yeah, exactly. It's even better. So, and it goes across all of them. Like, you know, you look at another one over here. We've got a repair that happened recently. We even had a retest. We've got a MACD cross again. These stocks are all starting to fire. And the reason that we've been ahead in the room as a community together of the nasty sector rotations and stuff, you know, the reason why we're doing this is because we're recognizing the technical repair. Tyron and I are big believers. Technical analysis, fundamental analysis if you're investing, obviously, in stocks, and understanding the X factor, whether that be just understanding something that makes total sense, that's just relevant, and you think, okay, what's human psychology behind that? Ultimately, everything comes down to the human psychology. So hopefully these things make sense, and you guys are starting to see it this way. So we've got some requests coming in here for some different stocks, Ty. Is there any stock that we're particularly looking at in the Oz market? I think we've kind of slowed down on buying recently in the Oz market, haven't we?
Well, the Oz market's overcooked, so that the options market has been pretty ripe for the taking for us. Yeah, we've been loving that. I mean, it's.
Well, I want to talk about this one. Like, this is National Australia Bank, just because the support, and I mean, imagine if we breach this. Imagine if we close below this point, guys. Ooh. That could mean, and we talked about this, it's cooked. Like, Tyron and I have been using option strategies all over this recently because we know that it's at a cooked PE and it's kind of expensive. But if we think about what happens next, and this goes for most of the banks, that's a beautiful support. But if that support, which currently is not really looking incredibly strong, is it, Ty, gets breached against, what's going to happen?
Yeah, look at that MACD.
No, the MACD's not happy.
5 peaks. Like, it's not. Look at the cross. Look at the 2050 moving average cross.
Oh, yeah.
Look at the last time it crossed. That's all those things are what we're looking for. Look at that. I mean, it has not crossed since it was down at $16. So, you're looking at all those sorts of things and you're saying to yourself, well, it's a long way away from its next dividend. Okay, so we know that for a fact. So, realistically, does it mean you're automatically short here? Well, of course not. But if we get a break and we get a daily close below that 25.80,
absolutely,
boy, it's a role reversal. It's a tough zone to break. But if it breaks, it's going down to 23 in a heartbeat. Like, it's down to 23.50, bang. You just watch it fall. Yeah, it's got to break it first. It's got to close below that level, and then happy days on NAB. And it's not just NAB. It's all four of the big ones. The other three as well.
Yeah, exactly. And this is these. Well, a lot of people are saying, oh, that means the US is done. Yeah, but the thing that's strange about it is you look at the US market, and then you look at the financial sector here, and you look at this and you think, it's come down, which it's obviously been on a rocket ship to the moon, similar to our one in some ways. Then it's breached a zone, hit the first level of role reversal, which is pretty much where that 24 is. Now, Ty, this is a major point of indecision for it, isn't it? When we understand, like, we're looking at the entire financial sector of the US market, does that look like, are you thinking, oh man, I'm so bullish on this right now? Or are
no.
You thinking, well, come on. I was just trying to trick you,
Yeah. No, just I know I'm typing here and you're half listening to you, but I can look at the chart straight away and know exactly what you're trying to trap me with. Yeah. No way. All I see is a double top. I see an Eve Adam double top.
These all still look quite weak. Yeah. Now, obviously, they breached this zone. Okay, cool. Onwards and upwards, back to test the highs.
100%.
We are at critical. What you're doing is the community is recognizing key critical zones, and this is the key critical zone. We're at it.
That's 100%. And I can tell you for a fact, Thomas, that you can draw as many fences as you want under that. If that breaks below that level, it's going back down to 35 in a hurry. You can do as many fences,
we're gonna stop it, guys. Don't worry. Now you're not going down. Come on, my JP Morgans, they're going upwards, onwards, and upwards. Not that I have any JP Morgans, but
Yeah. I'm gonna answer two very quick questions because they are a little bit relevant.
Sure.
Brad asks about, is there a time frame that I prefer on the MACD? The MACD that I like to use is on generally the entry time frame, Brad. So if I'm looking at a setup on on a daily chart, I'm not so concerned with the MACD on that daily. I'm more concerned about the MACD on the 4 hour because it's the one that's actually going to lead the way. Sometimes the MACD indicator can be a little bit lagging on the actual setup of the pattern. So I like to use the MACD divergences, especially on the time frame below it, which is where you're going to enter from. So the entry time frame is far more important. So that's where I'm at there. No, I'm not called Mac Daddy in the office. I can't remember who asked that, but no, my nickname is not Mac Daddy.
Mac Daddy.
Mac Daddy, no, not at all. And Dutch is referring to the new options course We have got a small options component in the stock market one, but no, the big options course is not far away, but it is coming, yes. And don't worry, you guys will all be the first to know when it's getting very close to release, but not just yet, Dutch. It's getting closer.
Amanda said that she liked the euro yen. I can totally see your trades here, Amanda. Yeah, wow, that trend line's so good. Who says that FX doesn't give you a good trade sometimes? What a beautiful trend line that got breached. And recognizing that breach and then retested.
And then tested from the bottom. Hello.
Yeah. There's been some trades. You guys got to reassess if you've been missing some of those.
Who found that? Was that Amanda?
Yeah, Amanda must have been trading it. She said it was good.
Oh, thanks for the heads up, Amanda.
No, I know. Where's my tag?
Hey,
Tom, it's come back to the daily trend line. Tyrone.
That's a break of the trend line and the 20 moving average.
Maybe it was in there. Maybe I just wasn't tagged.
Maybe I wasn't tagged either.
Yeah, I need to be tagged for these ones, guys.
Because telling everybody in the room, she's working. She's working for everybody, and she's working like 100 hours a week, and blah blah. And then she's trading, not telling us what she's putting in.
Yeah. That's gotta be fake data. What is this? What the hell? Is that real?
The hell's that?
I don't know.
It's not real, is it?
No. Well, okay. You go to capital.com, and capital.com doesn't look like that. So people want some views on pound odd tie. We're doing some requests now as we end up the session. Obviously, it'll be live on YouTube soon. Oh, look at all those weekly. Oh my God, that's a thin band, Ty, of all of the moving averages there. I don't think this has but you know what? That daily, I guess it would be correct now. This doesn't have much data in it on the weekly. So what do we think about this? Well, it's obviously coming up to a critical zone. It seems like the odd is actually the play here across the board. Because if we noticed, we had odd yen coming to a critical level. You got pound odd going to a critical level. Odd US dollar's been really good as well. Oh my goodness. Yeah, we'll be paying attention to this one over the next couple of weeks. Because this is a serious level. And we don't usually talk about the pound odd that often.
But a 20, like you got that, you get the break above there. The 20 is about to cross the 50. You got a lightning bolt on a weekly as well. Mm-hmm. It's a big. You got to remember this is a very very long term trade, but it's got 600 pips in it.
It's got a lot of pips, and that means a lot of top down analysis down into the smaller ones. We can see here that it's come down quite a few times to 1.82 kind of area, 1.824. It's tested the resistance. You've had rejections last time, so we're not out of the ballpark yet. But you know what? Breaches this zone. Something critical has happened here, and it looks like the odds across the boards are going. Okay, so we got some requests quickly here, Ty. Someone wants Macquarie or any views on Zillow and Beyond Meat, says Arnold. Yesterday on both at the pullback. Yeah, so I'll cover those, and then I'll do Macquarie, and I think that's probably all we've got time for. Let's just quickly do these. All right, so Beyond, incredibly speculative, guys. So obviously it ended up being flat as attack. This, look, if I didn't know what it was, again, let's put our opinions at the door on this mad stock and think about it. We've got above the 200 on the daily. Tyron and I love that. We've got above the 20 here. We've got a series of lower peaks, lower highs, getting breached above. Ty, what is your thoughts about this right now? If you were to look at this chart and you came in, would you agree that it has the chance to go nuts? Or not?
Yeah, I would say $199 is probably the target on it.
Yeah, it's a big target, but
it's a big target.
It's a big target, and it's not without its own risks. Where would we be looking at technical stop losses? Somewhere underneath the 50 exponential, I think, is the right move here.
It's very choppy. I always worry about charts a little bit when there's so much gap action happening. Like it is very. It's a wild one. This one. This is like a roller coaster that's actually missing parts of the rail. So you're going down the loop, and you've actually.
Ty, what we need you to do on the weekend is we need to take your family. We need to go to Grilled, and you've got to order Beyond Meat so that we can support. I'll do it, and we'll support the stock. That's what it's that meat company. So when you go to Grilled, they sell you the stuff. It's the fake meat. What is it? The mushrooms. It's the mushrooms.
Oh yeah.
All right, let's check out Zillow here quickly. Another good one. Look, it's strong repair, very similar to the others. Big base, volume starting to come through a little bit recently. It's dropped off the last 2 days. Tyrone would say straight away here, well, I won't put words in his mouth. What are you worried about here, Ty? And then what are
The
you not
200
worried about
moving
after
average.
that?
Well, the 200 moving average is a worry, but I think it will probably pull off that, come back down and touch the 20 and the 50 moving average, and then if we get above that, then I think it's happy days. But also, yeah, there's a line right there. Can you put a horizontal line right where that is now? And that's what worries me more than anything. And this is what you're going to be mindful
Previous
of, that
supports.
all that support.
Yeah.
So
Still a week
if
here.
it breaks that, oh look, yeah, if it breaks that, boy, oh boy, can it run? And it's got a long way
gotta
to
be
go.
crazy
Like
too.
you wouldn't want to be rushing into that trade.
No.
Like you want to let it do its thing, let it break
Yep.
above that level. Let all the beginning traders place their, break that wall down. Let them take the risk. And when that risk is gone, so when it has actually closed above that level, then you jump in and take the easy trade. But it's got potential and a lot of it.
Yeah, we've got Macquarie as well. Look, TXG rejection yesterday, no close above. Yeah, I know, but damn, like imagine if it breaches. Oh,
Yeah.
damn, that's a crazy stock. But yeah, it needs to breach, and that's a nasty candle. So
I love it when the stock pulls back just before a resistance point down to the 20 and launches off it. But if that was a big dirty green candle, I reckon this would be off and running.
Oh, it'd be nuts. I put it in the room
it'd be
yesterday,
nuts.
tried today. I was like, it's getting there. Got Triple M, and then we've got Macquarie. Triple M, the only problem I got was the daily rejection. Again, the market, it's doing strange things. Like ahead of non-farm payrolls, I think that's some of the problems. We had some great runs early in the week, but look, this is a good looking, there's a lot of trade going on here compared to where it was. I mean, it was boring, and then all of a sudden fell off, and there has been consistently large volume. It did double bottom on the smaller time frames. It did breach and close. And then we get these we get a daily and a 4-hour under. And I just don't know whether it's worth the risk. Ty, you saw those two candles. Is it worth the risk?
No.
With those, I don't think so.
No, I don't think so. I think there's better. And that's the thing. You've got to remember there is always a better opportunity if it doesn't make sense. Only trade what you really, really like, because there are thousands of things that you can trade. Don't waste your time and risk on things that you don't. If you're a little bit unsure, there's thousands of other people looking at it that have also got uncertainty. So there's enough quality out there that you don't need to be doing that, yeah?
Yeah. Macquarie is a tough one to read because this stock trades a lot with the US market, and it does kind of its own thing. They're kind of leveraged into that market as well. It's pretty much very sidewaysy. It's not the type of technical where I go in there and go, oh yeah. When it breached here with the gap and it came down and tested, that's a good trade. But this series here, all you'd be looking at is going into the smaller time frame, like a 1 hour, and then you would say, okay, do we have this? Yes. Have we just breached that? Yeah, we did, and then we instantly failed it. And you've got to say, okay, well, do I like this trade enough? Again, it's one that it's all right, but there's better quality out there.
There's better quality, and this is being run by two big economies. It's influenced by the US because it's so heavily based there, and it reports there. It's in US. It's US. It's very, very US hedged, and it's also conflicted with the Aussie market. I don't like it at the moment. I don't see it. There's nothing there that I don't like the short. I don't like the long.
I tend to agree, Ty. Look, I guess that pretty much brings us to the end because I got about 10 minutes to go till we get on the YouTubes. As always, look, a lot of people have been asked some great questions. Ask in the rooms, guys. Tag Tyrone and myself. Tag the mods. Everyone's really helpful. If you need something, we'll try to do it, and we are very active in there. You guys see us. We kind of live on the screens at the moment, which is
we do.
Right.
And now that the end of financial year is past us, we'll be able to spend more time in there. Now, speaking of end of financial year, there is literally 2 hours to go for the end of financial year sale. So for anyone who's in Australia who wants to get that last minute tax deduction on the course, if you haven't found the link, it'll be in Tom's room in a few minutes anyway. But hit us up. It's a really good tax deduction. It's all completely tax deductible, given bless the Australian Taxation Office's heart. So and it is heavily discounted, so it's a good chance to get in. Well done to everyone who has taken advantage of that, because there's nothing better than taking a little bit away from the ATO. Isn't that right, Thomas?
I'm not even, no way I'm going near that thing. All right, cool. Thank you very much, everybody. We'll see you next week for the webinar. We'll see you in the rooms, everyone. And you know what? This is obviously up for recording after. I'll chuck it in the Wednesday webinar room straight after this. Next ones will be going out. Remember, subscribe to this channel. This is our content channel. We post all of our private content here in the secret areas of the YouTubes for you guys. We post that into the Discord as well. Monday, Tuesday, Wednesday, Thursday. In fact, I'll show you all where it is. So there's going to be some inception because Ty and I are screen sharing. But you can see here, check out Chart of the Day. Obviously, we've been posting some great stuff in there. We'll continue to get more people in the room. And there'll be some special guests coming up soon in there, I hope. And then we've got Monday, Tuesday, Wednesday, Thursday, Friday. We do stuff all the time in those. And then, of course, we've got a bazillion other rooms that are in there. So great to be here. Thank you very much, everyone. We'll see you soon.